Hey everybody, this is John. Welcome to the free video. For today, we had a nice little kind of a day trade in Alibaba. I am looking for this to continue to rally. We've got a couple of stocks like this that have earnings coming up, and these stocks have been tending to move into earnings. If we go back here on a daily chart and we look at Facebook, we can see it's definitely rallied into earnings. After hours, it's up. The expected move essentially. So even though it beat handily, I'm not expecting like a 2x, 2 times the expected move. What's been happening is that these companies have they've anticipated good earnings, so they price it in, and then the company comes out and beats, and it's then staying confined within the expected move, which sucks a lot of life out of the options. Okay, so I would expect that to also happen with Amazon. So Amazon obviously rallying, insanely. Another big move today, up after hours. So the question is what could it do after, with earnings to make this go up even higher? And not much. So I would be, if you are playing options around the earnings, doing things around the expected move makes the most sense and been the most profitable. Today we sold a, let's get a 15-minute chart here. We sold a bunch of puts, the $14 puts on AMD prior to earnings, and we were hoping for a modest gap up, and we got an awesome gap up, so we were able to buy those back at a nickel, which was fantastic. So that worked out great there. And then of course we had a part of what we also had on was a spread. So those $12 long puts, it's not even worth the commission to try to close them out. So it's a lottery ticket. If for some reason AMD falls to $10 by the end of the week, that's great, but I'm expecting that part to expire worthless, which is fine because that was the protection. And then for CMG, we did the put credit spread. We're looking for a gap up. We did gap up. We booked it and got out right at the open, which was great, since after that it kind of went nuts. And then we did the tried and true fast fill theory, and with that we sold a call credit spread on Win and booked nearly, a quick kind of a max profit on that. And so all of those have worked fairly well. If we looked at Win, we got the gap down. That was great for our calls. And then Chipotle's, luckily we worked on that fairly quickly. Where did that open up? Yeah, so that gapped up. That was a gap and crap. So when it gapped up, that was great. We got out at the open, and it's a really good example of, look, don't look a gift horse in the mouth. And so we quote unquote only made $3 on it, but had we held on hoping to get max profit, we would have gotten whacked. So that turned out really well. All right. And then in terms of the rest of the week, and I'll talk about, we've got some internal indicators here that are actually showing some signs that the market's ready to take a pause, and I'm going to review that specific indicator in the premium video. Just keep in mind on a daily chart, the squeeze here typically goes 8 to 10 bars. Tomorrow's bar number 9, so it's kind of like, what else do you got? Not a lot, so we want to position ourselves accordingly. All right, you guys have a good one. We'll see you at the next update.